Hey, before we get started, I want to talk to you a little bit about our theme for this quarter, growing and protecting your portfolio. We're excited about various topics centered around this, but it really comes down to three concepts that will help you grow and protect your portfolio. You can find a PDF on our website about this. Go to wiserinvestor.com, scroll down to the bottom, enter your email address, and you'll get the PDF titled 3 Ways to Grow and Protect Your Portfolio. Thanks for listening. Welcome to a Wiser Retirement Podcast, where we cover financial topics such as retirement planning, tax planning, portfolio management, insurance, and estate planning, so you too can have a wiser retirement. I'm your host, Casey Smith, guiding you to financial success, or my co-host, Brad Lyons and Barnett. Hey, guys.
Hi, Casey. How's it going?
So the theme this quarter has been how to grow and protect your portfolio. And we can't not cover digital assets or cryptos, as we have in our headline today, because it's so much has been talked about it. So much is in the news. They broadcast it on CNBC the same way they would the Dow or the S&P or the NASDAQ. And so many people don't understand it. And we have a series of podcasts with our good friend Robert Swarthout. You can go back in our archives and listen to those. It's an extra podcast that we post once a month. We have one coming up in the next week or so with him, and you can learn more about that. So that we're not going to get into the details of what are digital assets necessarily. I mean, we'll cover some basics here, but does it belong in an investment portfolio? If you're trying to have a wiser retirement, is that something that should be a part of the mix? And I think we should go through the checklist of what it is and how it's supposed to help. So as we do that, and we each have maybe our own opinions of the topic, but it's something that's still being developed by many firms. Just the fact that we're talking about it first before clients are asking makes us a little more leading edge, I think, than other firms. Other firms are adopting it. Other firms do have cryptos in their portfolios. But you know, there's a lot of things. There's a lot of things to talk about, I guess, even before we get to our opinions or even the final answer. First of all, let's define cryptos. So we're talking about Bitcoin, Ether, and then after that, if you think of in terms of market cap, so largest market cap in the U.S. is Apple, right?
Right.
So Bitcoin's your Apple.
I think it's like 40% of crypto still.
And then Ether is going to be your next in line after Apple, which is probably what, Alphabet?
Well, it's a significant drop off in market cap between Bitcoin and Ether.
And then below that, there's other coins that are useful. But then we get into like silly stuff like Dogecoin that doesn't have much of a purpose.
Dogecoin, above those are the altcoins, though. I mean, Solana, was it Litecoin, Litcoin, Cardano? Those are probably some of the big three of altcoins before you start venturing into the meme stocks of cryptos, like you said, the Dogecoin and those things.
There's like I saw two publications. One was dated, so I'll go with the newest one. But basically, there's like 10,000 different cryptos you can purchase around the world right now. That's a lot.
Like I said, there's not a lot of fundamentals to them, so you're just kind of investing in them.
Right. So all these are built on top of the blockchain, which the blockchain there's multiple blockchains. It's not just one, the blockchain. It's like saying the cloud, but inside the blockchain has a lot of neat purposes. I think in the future, we should be probably voting in a blockchain where we go to cast our vote through our cell phones or wherever, and it's logged in forever and it can't be changed. There is no voter fraud at that point, right? Or shouldn't be. It'd be a lot harder. Anyway.
Supply chain and storage are two other big components that are kind of, they projector would be the big uses of those as well.
Yeah. I love the example of, a head of lettuce, and it has is making people sick. Instead of having to throw out all the lettuce across the country, you could literally pinpoint the family that bought it, the farm it came from, right? Or I guess you'd start with the farm it came from, which patch was bad, which grocery stores got it. We don't really record what individuals are buying necessarily, but in China they do. But in here, theoretically you could call up the Joneses and say, hey, don't eat your lettuce. Right? It was contaminated. And that's all made possible through blockchain.
And that is a fascinating prospect of blockchain, quite frankly. I agree with this totally, that, you can use this, in industry and manufacturing as well. If there's a part that is made just slightly off, being able to trace this all the way back to when it was created, and then look at the machine and the machinists that made it and see if there was something that went wrong, at that point in time. All can be done through blockchain.
Titles.
Yeah.
House titles, car titles, all those. You can get rid of all the paper records. It just being
definitely more efficient.
Yeah.
So that's definitely the way of the future. There's no doubt about that. Just depends on how much municipalities start adopting that technology, which I assume would be fairly slow. But going back to cryptocurrencies, it's very interesting. We're recording this at a time when country of Ukraine is under attack, and the sovereign nation democracy being attacked by basically a brutal dictator now at this point. If we didn't know that before, we know it now. So, it's a very delicate situation, but there's I have to look at my phone. There's a Twitter account that I've been following, the Kyiv Independent. Basically, it's journalists on the ground there in Ukraine. And what I find is I'm getting the news faster from the people on the ground than I am on the news channels, because they just kind of repeat themselves and they insert something new every now and then. But I was not shocked, I guess, but I was kind of excited to see that Bitcoin is being donated directly to the Ukrainian army. And they're using that to buy weapons. So if you think about how difficult it is to actually transact internationally, right? In the news, SWIFT has come out, but SWIFT is, and how nations move large amounts of money. But the whole Bitcoin transaction just skipped every government. Nothing, nobody had to approve that. It was just done. And the transaction gets approved by all the people that are saying, oh yes, you moved money from our crypto from this wallet to this wallet, and I verify this is all certified, right? So that, to me, that's the purpose of these digital currencies. It's circumnavigating anything to do with politics and governments and either physical or virtual walls to get things done.
The flip side of that, though, is also it still can be a dark web. They mentioned, obviously, yesterday Bitcoin was up 14%, saying a lot of that could have been Russian transactions because, like you said, you're out of the SWIFT system, but there are other ways to not be flagged for transactions within that as well.
Yeah. Well, it kind of brings up a point. What you say, Matthew, is that there's a certain amount of anonymity that occurs when transacting in these cryptocurrencies as well. So in a sense, I mean, there may be bad actors, but in another sense, people who wanted to contribute financially to the Ukrainian effort, didn't have to worry about, being spotted, if you will, identified as somebody who contributed,
right?
So they could have done it in complete anonymity.
Yeah, very true. If you do it right, if you try to donate money out of your Coinbase account, they're going to know exactly who it is. So there's a whole nuance to that if you want to be completely anonymous. Yeah. I believe that's a good question for Robert.
Yeah, but if it's a hacker, they're finding ways. That's the whole issue with exactly. What happened when they're doing the ransoms as well. So everybody can figure out some workaround.
So what's the purpose? What is, let's just talk about Bitcoin, because that's the largest, as far as market share, that's the largest market share that we'd have. And that's what most people would probably buy. So we just discussed that a pro side is it's great for global transfer. Probably not the best for global transfer, but it does do it very more easily than trying to get money either through snail mail to Ukraine or going there yourself. I know a little bit risky right now, or even the traditional banking ways. One of the things they talked about Bitcoin for a long time was storage value. So, you are going to store it in you're going to store your cash in Bitcoin instead of storing your cash in cash. And I think the volatility of Bitcoin has kind of ruined that. I mean, no one ever wants to watch their cash move up 48% and then drop 25%, right? So I don't think that that's a reason to be owning Bitcoin for storage value. Now, maybe for Americans, but if you lived in Venezuela or Brazil right now, you might be interested in storing it because a 48% drop or a 25% drop is probably nothing compared to your own currency's drop, right?
You've seen countries start to do that, and you've even seen some athletes start to take Bitcoin as their form of payment.
That's ridiculous.
Mostly when they started doing that, Bitcoin's dropped. So I don't think it's worked out for anybody to date, but
right.
You are seeing some more of that.
But store of value is one of the things on the checklist per se that defines a currency. The ability to store value, store wealth, for later use in a currency itself. So,
right.
And there's an interesting book that I read years ago. It's called The History of Money. And it's all about all the different types of currencies we've had over thousands of years, how you can trade, X for Y that have unequal value and use currency to equalize the value of the two. And then how you store that value in the currency itself until you decide to use it or need it. And the question is, as you put it, do these cryptocurrencies, do they store value? And interestingly enough, they haven't gone to zero. They don't appear to be going to zero, but they do fluctuate in value. So it's, if you are going to use it as a storage of wealth, storage of value, it's still long term, right? I mean, You can't put it in your checking account in the same way that we put U.S. dollars in our checking account and then go to Kroger the next day and buy groceries with it and expect it to have the same value as it had yesterday when I put it in. But does it store value? Yeah, it appears to. But it's interesting on how well it has a volatility relative to other currencies, so you just have to consider that, if this is one of the purposes you use it for. So.
Yeah. Another thing they talked about, and I think this has been debunked at this point, but is you'd buy Bitcoin as an inflation hedge. And we just had a good test of that in 2021, right? So, I mean, inflation was what? Officially 7%?
7.5%.
7.5%. Mm-hmm. But yeah, Bitcoin was not up in 2021.
Yeah, it's interesting if you look back going pre-2020, it was pretty in line, pretty flat with Bitcoin and inflation rate. Then obviously right at the bottom right before 2021, it did rise with inflation, which was kind of expected. But like you said, from the beginning of 2021 till now, Bitcoin's dropped significantly in the middle of the year, and then beginning of 2022, it's already dropped significantly. So it is not moving in tandem with inflation at all. It's moving downward minus yesterday as inflation's continuing to creep up.
So that, I wonder if it changes for Bitcoin, because Bitcoin by 2035 will be fully, they create new Bitcoin, I guess, every single day, every single month. So at some point there's a finite number.
I think it's 21 million.
So when it hits that number, they're not going to make any more. So at that point, possibly it becomes maybe a better inflation hedge, but right now I would not say that you buy any cryptocurrency to help hedge inflation.
Well, Bitcoin's only been around since 2008, 2009. So we're already at pretty low inflation rates. And so it's steadily starting to creep up. But I just feel like there's not enough data, just like when we look at fundamentals and how it fits in portfolio. There's not a ton of fundamental data to look at and analyze there.
Do you guys know what was the rate of return if you bought Bitcoin for all of 2021? I've got it right here. I can pull it up real quick if you don't have that. I mean, just over the last year, the Grayscale Bitcoin Trust was down 31%. This year, down about 14% year to date, and then I can run a 1 year chart.
We'll just look at the fluctuation of it got up to like 63,000 maybe at some point, and then it dipped all the way down to about half that in a few weeks or a week. And with yesterday's bump up, I still think it's 44,000 or something.
So, all right. So if you're in the Grayscale Bitcoin Trust, then basically for 2021, it's showing you're up 7% for the year. Inflation was 7.5%. So I guess you sort of kept up with it, but you've been better off in the S&P 500.
That wasn't a linear progression either. If you look at that chart, it wasn't upward sloping at 7%. There was a high peak and a valley, and then another high peak, and then another valley to get that.
It was up over 60%, maintained 60% for a short time period, and then it fell dramatically back down. The volatility was very high. So I don't think that we could say in 2021 that if you'd bought for inflation hedge, that you've been very happy with that over the 12 months. I don't think we can check that box that it's a good inflation hedge, at least right now.
We'll find out this year. I mean, like you said, in creeping up to 7, it might flatten out. So if it doesn't maintain that through this year, then it definitely hasn't held up to that.
Correct. So what about correlation? Brad, do you have any correlation numbers with Bitcoin and like gold, or Bitcoin and Bitcoin and just stocks in general?
Well, it appears to be as more of considered more of an alternative investment, which by definition has non-correlation in its return stream. So that would be one reason, if people were trying to determine whether or not it's an appropriate investment for themselves, to take a look at these cryptocurrencies, because the non-correlated return streams. It doesn't appear that there's a high correlation between these cryptocurrencies, Bitcoin in this case, and publicly traded securities in the stock market. So you get a non-correlated return stream, if that's the sort of thing you're looking for, which is just used in a portfolio for diversification. So rather than for increased return, investors can be looking at this some sort of investment as a way to further diversify their portfolio away from public markets.
I mean, people were saying, Bitcoin's the new gold. Gold isn't this volatile in price.
No.
And you can explain gold's movements. I don't know that I can always explain Bitcoin movements.
I was thinking of that earlier when we were talking about the fact that, Bitcoin is quote, mined, right? And in 2035 or thereabouts, it would seem that it's projected that all the Bitcoins to be mined will have been mined, okay? So there appear to be a supply and demand issue here, because there's constantly supply coming onto the marketplace. So as you're kind of alluding to, Casey, is curious as to, what drives the price then. And if it's not demand, it may simply be people, they simply want it, that could drive the price. And we don't know where those people are, if you will, because whereas on a public market exchange, you see this free flow of buying and selling, but on these private type exchanges and these transactions that are occurring in the cryptocurrency marketplaces, we don't see that, on a buy and sell flow as to where these cash flows and money flows are coming from and going to at any given time.
This is probably a good time to introduce the fact that Bitcoin, cryptocurrencies in general, are not regulated. there's no SEC protection or domain for the SEC to monitor or any repercussions at all. So
not considered a security.
You can have it. You can have a situation where a person with great wealth is able to manipulate the market for their own gain, and it's perfectly legal right now. So it's, yes, you can. Okay, you can buy. It's probably harder with Bitcoin, but I'm sure that it still happens. But you can buy other lesser coins, and easily be able to manipulate the price of that. And so you could even go out there and front run it if you wanted to, like the old stock game, right? You buy a penny stock and then you get it all, you pump it up.
Well, that's exactly what I was thinking.
Pump and dump, right?
Pumping and dumping, on penny stocks.
You can easily do that. I mean, even
that was the unregulated days, 100 years ago in the stock market, where wealthy investors did manipulate the stock market, which brought about the regulations that we see today.
Even a smart guy like Mark Cuban purchased a new coin that was coming out, and the whole thing was a scam. They pumped it up, and then they basically, okay, everybody invest their money, and then they said, oh yeah, we're actually not gonna do this coin at all. And then when that happens, they just kept the money, and there's no repercussions for that. So there's tremendous risk in investing in the altcoins, that down at that level for sure.
I don't know if you'd even call it investing. It really is speculation at some point.
So do you think a lot of this is just greed? People want to have coins in their portfolio hoping to hit it big because, the original Bitcoin investors are doing pretty well.
Well, probably. You look at, you see that even 60 Minutes did on that guy who bought a pizza with a few Bitcoins back in the day, and he would have made billions, I think, or a lot of millions if he would have just held on to it rather than transact for pizza.
I hope it was a good pizza.
Yeah, exactly. But I think it's probably that get rich. You hear people that even bought Amazon stock back in the day have gotten rich, but it was just on a bigger scale of you buying around the 2000s into something like this, and you became extremely wealthy. And I think that would probably project behaviors of people wanting to, even if they just buy and hold, thinking that one day, if there is a bigger need for the blockchain in general, that they could become a millionaire because of that.
Yeah.
Well, you also have basic human behavior that plays a role in this, and there are early adopters, people who want to be in first. They get in first. They get in early,
right.
And then they go up the S curve, and we'll see about whether or not the general public, wants to adopt these cryptocurrencies and buy into this or not. And we'll have to kind of wait and see a little bit on that. But if so, these early adopters will look very smart and be very rich, possibly.
It kind of goes back to, everyone wants to live a lifestyle that they want to live with no limits. And we see it's not 1%ers that do that. It's probably a 1/4%ers, honestly. But we look at that, and so many of those people have stories of just hard work and perseverance and failures. There's so many things that they go through to get to where they are. It's like the college I went to had one of our pitchers ended up pitching in a World Series, and everyone thinks that he graduated. He actually didn't even graduate. He got recruited before he finished. But everyone thinks he got recruited out of college, and he went. Next thing you know, he's pitching in the World Series. And actually, I think there was like 6 years of doubt and despair in the minor leagues, wondering if he's ever going to make it to the major leagues before he eventually got good enough to be able to be a closer in the World Series, right? And so there's so much of that people just think that, oh, they got that. So much class envy or shaming, I guess, in this environment now, that everyone thinks that you can get rich overnight. Let's just go buy these coins, and tomorrow I'll be driving a Benz, living, having 4 or 5 multi-million-dollar homes and a private jet, and it can happen like that. I guess that's a possibility. It's called a lotto ticket, right? But that's typically not how you become successful. And so I think that a lot of this is greed, or I want this to do all the stuff that I haven't been able to do personally.
Well, I mean, a lot of this mania was younger kids that were out of college that made more money trading and transacting, and not just Bitcoin, but all the other meme type altcoins. And they made a lot more money working from their couch doing that for a few more hours than they made with their real job out of college. And so that kind of a whole generation there was really focused on just cryptos in general being the new wealth creation.
It doesn't mean that it's bad to invest in cryptos, and you're investing for cryptos for other reasons. I mean, we all invest either to protect a lifestyle or to grow a lifestyle, right? I just think that you have to be careful that this isn't something that you're just pouring all your money into. If you open up your brokerage account and you've got $10,000 there and you've got $1 million in coin, there's a problem, right? It just doesn't make sense. Statistically, doesn't make sense. Mathematically, doesn't make sense, right? So I don't know that crypto is a bad investment. If you're not invested in cryptos currently, should you do it? I mean, I guess we don't do it here at Wiser, partially because the barrier to entry is so high. You know, we can buy a grayscale, but we're potentially could be paying a premium for the product. Some days it wouldn't even trade when everything was kind of hot and heavy near the highs. There are new platforms that are coming out that allow advisors to be able to easily trade cryptos. One of them is OnRamp for financial advisors that basically connects to your Gemini or your Coinbase account and allows the financial advisor to place trades on your behalf. So that's starting to roll out. We've seen.
So the infrastructure's being built.
Yeah.
After the coin was realized, if you will.
Yeah.
So we got early on. It's like they got out a little over their skis, so to speak, as adopters to buying into cryptocurrencies. But now the infrastructure is starting to build around it for more and more people, if you will, more and more investors who want to get into this marketplace and do it in such a way that it has a sensible approach to it. For example, the on-ramp, you can utilize the index that was recently created in the cryptocurrency marketplace.
Yeah, the wisdom tree.
The wisdom tree, cryptocurrency index in conjunction with Ritz-Hold cash
I think that
asset
launches
management.
officially this month.
It does for advisors, not for retail investors yet.
Yeah, correct. Advisors.
It's still an index, though. It's an index that they've made. There's still no regulated ETFs that have gotten passed yet. Many have tried, but there's still not. Besides the Grayscale Trust, there's not.
Instead
not
of
ETF.
It's not a fund. It's more like a prescription. say buy these and these percentages. I guess
That's exactly what it is. Yeah, and they can create models, utilizing that, and it just gives you a way to invest should you want to, in a way that at least has some sort of recognition that there are different coins out there and they have different levels of risk, and you want to participate in all of them because you don't know exactly which ones will be the winners, if you will, in this marketplace. So, the infrastructure is coming. Okay, it's very young. It's very immature.
But it's still a big risk for an advisory firm to invest in cryptos.
Absolutely.
Partially because of the volatility. Can your client handle the volatility of that? Because I know that the top two are either in Bitcoin. You can buy those and hold those, and should be fine long term. Just going to see a lot of carnage at times.
But you can see weekly moves that are more than what you experience in a bear market from the stock market.
Absolutely. But when you go below that, though, there's a chance those coins don't even exist. There's a chance that they get determined to be something else other than coins, right? So there's just a lot of risk there, I think, for advisors. And we think about building typical stock and bond market portfolios, which I'm talking about the industry. We're all pretty good at that now, right? You've got some small, maybe single operator firms that probably aren't that great at it, but most of us have figured out how to do this. It's fairly automated when it comes to building model portfolios. But when you think about crypto world, I don't know that that's a buy and hold strategy. I think that's probably more of an active strategy and how you trade it if you're truly trying to make money at it. Now, if you think that it's the future and we're going to be having more commerce conducted through coins, like this, then maybe that is a buy and hold approach. Say, hey, I'm going to buy this. It's below its average price, and I'm going to add it to my portfolio. In that case, why do you need a financial advisor for that? Honestly, why wouldn't you talk to your financial advisor about it and say, hey, I want to put 1% of my money in Bitcoin. Okay, great. Here's a Coinbase account. You're going to pay 3-4% to buy it. And then once you do that, then you just leave it. Forget about it. Right? I mean, I think it could be that simple. Mm-hmm. But if you want to have a trading strategy centered around it, then I think that's where you need guidance. I don't think that's something that most people want to spend time doing, is researching the nuances of all this, right?
Well, not when a new one comes out every week or monthly, the big ones. You got to actually dive into what's the purpose of it, because like we said, there's not any fundamentals really to it.
And then, here's the big one. What happens should the government decide to regulate it? Yeah. Which direction does it go then? And for the people who are holding it at that point in time, maybe it's the best thing in the world. Maybe it's the worst thing in the world. We have no earthly idea how this would behave in a regulated environment.
Or if they just approve a Bitcoin ETF, think about the volume that'd be purchasing Bitcoin at that point. That would have to push the price up, you would think, but I don't know that. It could have no effect on the price. I really don't know. Mm-hmm. You know, there's just so much unknown. And honestly, for financial advisors to stay on top of it, I don't know how they would. I don't know how they would do that. I mean, it's a daily search and daily reading of articles, which who knows if they're right? Like, who's writing these articles? You know, there's no Morningstar reports on this. There's no S&P reports on this. I know that Warren Buffett doesn't own any digital currency, but he did buy a company that's related to it. It's been added to his portfolio. So he's kind of on the outskirts of it, I guess, but not willing to actually purchase any of himself.
You see banks doing it now too, which said a lot about the future of it when they started dipping their toes in the water for that.
That's true. After several years of saying, no, this isn't real, then all of a sudden...
It wasn't a ton, but it was a little bit. So they still believe in it somewhat.
Right. So I don't know. I wish we could say yes or no, but it just sort of depends. You know, if it's something that interests you, you like that technology space. Again, it goes back to limit it around 1-2%. Don't put any more of your net worth in 1-2%.
It's the same way you say nobody to be over allocated to one stock or one fund of 10%. Yeah, it's kind of been the general rule of thumb.
I got a note here from an article that I had gotten here recently. So in 2017, Bitcoin was up 1,500%, and then it was down following year, like 84%, right? If you just had a 60 stock, 40 bond portfolio, you would have had a 7% in year one, 14.5% in year two. If you added just 1% of Bitcoin to that 60-40 portfolio, year one, you've had a 22% rate of return instead of a 14.5%. In year two, you would have made 15.4%. So what's interesting is you benefited a lot from the upside, but the downside wasn't as horrible because it's only 1% of your total portfolio. Now, if you simulated a crypto crash completely, it goes to zero, then instead of getting a 14.5%, you'd be up about 6% in 2017. So you still made money, but you took a big bath on that 1% of your portfolio. Year two, you were up about 13.4%. So, Brad, I showed you this a long time ago. I remember I came into your office and said, hey, if we did this crypto thing, no more than 1 to 2%, because if it goes to $400,000 a Bitcoin, then we participate tremendously. If it goes to zero, it doesn't really hurt us that much because it's only 1%. Right. I mean, typically when you look at asset allocation, you should always have at least 10%. You know, we see this on DIY portfolios all the time. You know, they have 1% of something or 2%, or they just kind of dabble, and that doesn't get you anywhere.
Right. It's a very low conviction.
Right. You read an article about this mutual fund. You bought the mutual fund. You put $10,000 in it, but you've got $10 million in your portfolio.
Yeah.
We kind of chuckle when we see that.
Yeah.
But yeah, it doesn't, you're not moving anything. So if you're going to invest in something, at least put 10% in it. That doesn't apply in this case at all.
No, it doesn't. No.
In this case, you do want to do 1%. And you just buy it and you sit there and you stare at it and leave it alone. I think that's the best strategy right now. If you like gambling, if you like going to Vegas.
Well, I think Matthew's used the correct word, and it's speculation, right? So there are savers, there are investors, and there are speculators, and this one may fit into that speculation category. It has investment characteristics, and if it can store value, it has savings characteristics. So,
right,
with our money, we have the ability to express our beliefs in some ways. And if you have a belief that the technology and our economy is going to move in such a way that blockchain currency is going to be something that's going to be beneficial, sure, go ahead and put some money into it. Because like you say, Casey, it's the upside is potentially greater than the downside, but you just have to recognize that there is risk in the downside of this.
I was never a gold fan.
Yeah, I was never a gold bug either. Just not.
You buy gold, and then what do you do with it?
Yeah.
I mean, if you buy gold from the guy at the mall, the spread is huge.
Right.
Late night
hundreds
infomercial.
of dollars, right? Hundreds of dollars.
Yeah.
My father-in-law passed away many years ago, but he had lots of gold coins he bought off these infomercials, and my mother-in-law sold those gold coins recently, and she still didn't get what he paid for it, even with the big run up in price in gold. It just doesn't make sense.
And in the meantime, there was no cash flows.
No,
right.
You
Okay, and this is what
Yeah.
part of a definition of what an investable asset is.
Right.
Okay, and that is cash flows. Because in the midst of a global pandemic, in the midst of a great financial crisis that 15 years ago now, there were still cash flows going through IBM.
right.
Yeah. Prices went down, but you take gold, you take an asset, such as a cryptocurrency. There's no cash flows.
No. If the dollar crashed, what are you going to do? You're going to be out there with your gold bar, and you're going to kind of you're going to McDonald's and say, how much do I need to shave off? And you shave off a little bit.
Exactly.
I don't know how that works. Now, on the flip side, you can pay for stuff with Bitcoin.
That's true.
That's a notch above gold.
Right.
You can
not
transact
everywhere.
Well, not everywhere, but in times like this, I mean, I bet you there's some missiles being bought with Bitcoin right now.
As long as somebody's willing to take it,
Yeah,
you can use it. It's when they stop.
Yeah.
If they stop be willing to take it, then it becomes worthless at that point in time.
So again,
but we don't see that happening.
Maybe it's about perspective. If I lived in Ukraine and it looks like Russia's going to eventually take me over, and I'm not going to, the ruble's been trashed because of the foreign response, rightly so. And then I don't know what's Ukraine trade in. I don't know. I'll have to look that up.
Yeah.
But whatever their local currency
until
is.
now, it's never occurred to me that I needed to know this.
Exactly. But whatever Ukraine trades in, it's going to be worthless, more than likely. So in that case, Bitcoin looks pretty good, doesn't it?
Yeah.
Yeah. Because you can pick up shop in any EU country and convert that to a local currency and go about your business.
Even if it is volatile, at least it has some type of value.
Yeah, right. It's better than being worth zero. I don't think.
And therein lies the ability to store value.
Yeah.
But here in home, we don't need that.
The U.S. dollar is not under attack at this point in time.
No. So again, it's all about your perspective and where you live. If you're looking at from that angle, if you're looking at investing, then I think the angle is, hey, we're going to be trading more like this in the future, right?
That I would agree with.
We're going to be trading more like this in the future. Then I want to be an early adopter of that, and it's going to be 1% of my portfolio. I'm going to buy the top 5 coins, and that's it. If you're a young person and you're putting, you're maxing out your 401k, maybe you're putting a little bit more into a brokerage account. Just whatever you're saving, just do 1% of that. Just shift that over to to something else. What's all over the websites for these coin companies, one, they always say you should have 4 to 5%, 4 to 6% of your investments should be in digital currency, and they're very biased. Don't pay attention to that.
The exchanges, so they can make a commission on both sides. The
exchanges benefit from that 4 to 6% number.
They're like 4 to 6 times.
Yeah. Yes, exactly. But everywhere I read, it says the dollar cost average is the best way to do it, and I guess in a volatile environment that sort of makes sense. Every month you're going to throw $50 in this account, $100 in this account. So I don't know. We're certainly not recommending that people go invest in cryptocurrency. We're also not stating that you shouldn't invest in cryptocurrency. It's a I don't know is where we are. I don't know.
Again, it's going to be a personal decision on how you want to, an investor, asset owner, wants to allocate some of their money. If they just simply want to own it or not, and profit someday from whatever it'll be in the future.
Well, we're being very open and honest about all this, and
right. We
also get the right to formulate a new opinion as time evolves.
Right.
But it's something that we watch very closely, and something that we are learning and understand about. Brad, you and I have sat on many webinars here recently with companies launching their version of crypto trading, and just learning and listening. That's our jobs as advisors, is to be learning and listening and figure out, as fiduciaries, figuring out how does this apply to our client base. And, certainly I think if clients said, hey, I want to do this, how do I do it? I want to make sure I have a platform for that. But if he's like, I don't know, I'm living my happy retired life right now. Why do I need to have this? If it's only creating anxiety watching the volatility of it, well, first of all, that's why you do 1%. But it is neat to watch and learn and read. And
to see a whole new asset class evolve right before our very eyes.
Oh, absolutely. Yeah, absolutely. All right, guys, great conversation. I'm sure that we'll be talking about this more, and we've got a podcast coming up with Robert here pretty soon. So we'll take some of our new questions to him as well. See you guys.
Thank you.
Bye.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening, that way you don't miss any new episodes. We would also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. We would love to hear from you. This episode was produced and edited by Lilton Moore. Wiser Wealth Management Incorporated is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.